Welcome everyone, welcome regular followers and new. Thanks for jumping in on my page. Now today we are going to talk about ETFs. Okay, so before I talk about an ETF, I need to talk about an index. So an index or an index is a group of stocks clubbed together and traded as one. So for instance, this is called S&P 500. So it's known as Standard & Poor's 500, which has the top 500 companies in the US. And we can see in the US, and the market is not quite opened at the moment, and we can see from there. So there's loads of ones. So you have the Nasdaq, which is mainly made up of tech, and that is the top 100 companies in that sector. Then you have the UK one, which is the FTSE 100. So it's the top companies in the UK now. The FTSE is also made up of companies from different companies from different countries, but they are listed on the UK stock exchange. Okay, so just be aware of that. So they're not all English. And the same with the likes of the US, you have Chinese companies listed on it. So all the companies are not all the US, but because they're traded in the US, they've listed on the US stock exchange. Now, the idea of an index is that companies are put together and traded as one. So which means then you don't have to know the ins and outs of any particular stock. So there's 500 stocks here. Now, I don't know the ins and outs of any of those stocks. I don't know what's going on. But what I can see from here is that we have an overall trend going up. And if I zoom out, I can see that this trend consistently goes up. So isn't that something that we should be investing in? Absolutely. But the question is when do we invest in things like this? When do we jump in? When is the correct time? When is not the correct time to jump into stuff like this? Now, the problem with trading the S&P 500 in index is you have to use leverage to buy it. Okay, so this means you cannot buy it as the underlying asset. Okay, it's not an underlying asset. And that's where sort of an ETF comes into play. Okay, so here is the SPY, which is the S&P 500. Sorry, I'll just pull up here. So the SPY. So there is the SPY. It is the ETF for this particular index. So what they have done is they have bought up at least one of all 500 shares that's in the actual index. And so what happens then is that every company that's in the actual index is in this ETF. So which means then that if you invest in this ETF, you're actually investing in the companies themselves. Okay. Now, as of a couple of months ago, the law has changed, which means then that they have changed this from an underlying asset to a CFD. Okay, so CFD is a contract for difference, which means that you don't physically own the underlying asset. But what all companies have done is they are using this as X1, which means then they are trading it exactly the same as the underlying asset. So even though it is a CFD, it's still traded as the underlying asset. So which means then, theoretically speaking, you actually own part of this. Now, why I'm actually talking about the likes of the SPY, why I'm talking about the likes of ETFs is that obviously we've had a big talk yesterday. We're talking about the B word with Cathie Wood. We had Elon Musk all on the panel talking about stuff like this. And Cathie is very known for her ETFs. So ARKK and ARKF are some of her funds that she actually trades herself. So it's been a question that a lot of my clients have asked me, what is an ETF and where does it come from? Now, one of the good things about an ETF is that you don't have to do anything with it. You don't need to know anything that's going on in all the companies that are invested in it. So, for instance, we have the S&P 500. Okay, so if we look at the S&P 500, we have a little chart here. It's just a line graph over the years. So since 2011, this is the growth that this has taken over that period of time. Okay, that's the growth that is taken over that period of time. Just to give you a little bit of background on the S&P 500 is that the S&P 500 was initially called the Composite Index, which was created in 1923. Now in 1957 it was expanded to the 500 companies that it is today. Okay, so this has been going a long while, and it's if you look at it from the day it opens to where it is now, it's gone up exponentially. And that's the idea of trading the likes of these. Now, what an ETF stands for is an exchange traded fund. Okay, now what exchange means that it is traded on the stock exchange. So the exchange traded fund. So that's where the ETF name comes from. And we can see that this chart is now continuously gone up. Now, if we look back over the last 15 years, we've seen on the chart here that it goes up, it goes down, there's some negative, there's some plus. But the idea of this is that this continues to grow. And if you look over the 15 years, it averages about 9% over the last 15 years. Now, has your money grown 9% over the last 15 years in the bank? I very much doubt it. With inflation now, it means that your money in your bank account has probably depreciated. So this is why the likes of these funds are so readily used. And SPY is the biggest ETF in the world. Okay, it's one of the ones where people just get their money, put it in there, and on average they will do 9 to 10% a year on the likes of this. So we do have negative years, we have positive years. So overall, leave your money there, and that's the idea. Now, for people who are looking for a little more into this, they're looking to trade the likes of, you're looking to when are the best times to get in, when are the best times to get out on the likes of these ETFs. So the idea is that we have a phase 1, phase 2, phase 1, phase 2, phase 1, phase 2, phase 1, phase 2, phase 1, phase 2. We're now currently in a phase 1. So the idea is that we're looking to get into these when we're at the bottom of a phase 2. So how do we know when something's at the bottom of a phase 2? By using horizontal levels here. By using what previous data we have, we can work out and see where they're supposed to or potentially going to come back to. So we've seen this phase 2 happen here. How do we know where that's going to finish? There's no 100% guaranteed hard or fast rule, but the idea is we use logic. If we know that this is going to continuously going up, we put in horizontal levels. So see that there? It hit its head here once, come back down. It's hit its head twice, come back down. It broke through it, broke through, and now come back and retest it. So that's called a break and retest. Okay, so it broke and then retested. So this here would have been an ideal opportunity to get into the likes of this. And trading is very simple. It's something that it repeats itself. As traders, we're looking for patterns. We're looking for the same things over and over again. If we get in a little segment here, a trend line, what I can do is to start at the bottom here and go across. Hit the floor, went up, hit the floor, went up, hit the floor, went up, hit the floor, and we would expect that to go up. So we're now in that phase 1. Now if you want, I can go back a little bit further and I can pop that in as well. Now with the likes of these lines, we're allowed to chop off the wicks of the candle. So just to explain to you what a wick is, see this really slim line? That's called a wick. So that's what a wick is, that little small line, that's a wick, and this is called the body. Okay, so the body and the wick. And we can see, I can extend this on further. We can get on further if you want. The idea is that this is, we can predict all this. We can anticipate this. All we have to do is sit in our hands and wait for the correct times. And there are the times we should enter. There, buy it, buy it, buy it, buy, and then buy again. So the next position to buy on this, so we're already in this phase 1. What I would expect to happen is to continue going up, and then one of two things will happen. It will either bounce of this area here, or it will come back to the trend line. And there are the two scenarios, plan A and plan B. So this is plan A, this is plan B, and this is trading 101. Anyone ever heard of buying at the dips? And that's what we're doing. But the difference is that we're looking at stuff that's trending. We're looking at stuff that's going in an upward trend since the day it opened. Okay, and that's the idea. Look at the trend here in this. That's phenomenal. That's the investing. How easy is that? To put a little bit of money there, put it there and walk away. Now, what I've done on the likes of this is I've set up an index fund for my little girl. Put some money there into it and then just let it run, let it compound. Little direct debit goes into it every month and then I never even see it. I don't have to do anything with it. And I know that this is going to grow over 10%, in around 10% a year, which means then by the time she gets to 18, by the time she gets to 21, by the time she gets to 30, how much money will be in that index fund for her? Little things like that. So people generally say to me, oh, but Henry, I don't have time to return 10%. But what you could do is get a proportion of your savings and put it into the likes of this. You have the QQQ, which is the NASDAQ. That returns about 15 to 18% a year. You have the likes of ARKK. Now ARKK is going 6 years and that returned about 45% over the last 6 years. So there's loads of ways of jumping in it. And this is simple. This is, you do not manage this. You put some money in there and you walk away from it. You come back to it in 10, 15 years. You set up a little direct debit of money going into this weekly or monthly or every quarter or every 6 months. Put a little bit of money into it and then go from there. But if you're someone who's looking to trade it, you buy at the dips. You wait for a dip and then you buy. If you're someone who's just looking at this as long-term investment, it really makes no difference when you buy it. But if you're looking to trade it, you buy at the dips, and that's when we jump in. Hope you enjoyed this, guys. Click on the follow button, and every Tuesday I will be uploading the market analysis where we go through all markets, crypto, FX, indices, stocks, so anything that anyone has asked for. Whereas this is a little more, you have to request it. So if there's any stock or any sort of investments that you want to ask me specifically about, don't be afraid to put it in the comments and then we can go into it in a little bit of detail for you guys. Thanks very much. Bye bye.